and it is Sunday morning. This is the stock investor conference call to talk about stocks and what's going on with the market, and just have kind of a get our thoughts in order for the week. It's been a really good year, if I may say so, where the S&P is up 20.79, and that's a really good year. And if you look at really like the trailing 2 years, I mean, it is up nicely. It's up almost 60%. So that's a very good period of time, and I will take it. It's very good. Year to date, I'm doing well. I'm good. Like if the year ended today and it's like we're not going to get the next 2 months, that'd be fine with me. In the last 2 months, especially December, it tends to be a favorable month. You've heard of the term Santa Claus rally. That's what happens in December. Usually there's some action that leads to a rise. And but who knows? Maybe this year is going to be a little different because to this point, September and October have been better than I expected. So it surprised me to the favorable side. And for all I know, I'm expecting a positive November and December, and the opposite happens. But even if it did, I'm still going to have a good year. So it's been a good year to invest and be invested. At any one time, I'm invested 10 to only 10 to 15% of my of my portfolio is in cash. The rest of it is invested in a stock or a bond or real estate or crypto. And I would say that I've got maybe about 12% cash right now, which is just fine. It's just enough cash for me to think if we have any kind of correction to take a little bit of the price tag off this market, I'll be glad that I have some cash to spend, and we'll go from there. So I closed the books on my October, and again, maybe I should just keep thinking negatively because then the market does the opposite. And I went into doing my accounting for the month and expecting that I thought I was going to lose about $8,000 in the month, but I ended up doing the accounting, and two things really helped me was crypto went up and it made about $10,000 for me. So that helped. And then a couple of individual stocks really did well, and those rescued the month. So I ended up to the upside by maybe about $10,000. And so that was a favorable move. The previous month I made $80,000. So excellent. And I thought September was going to be bad. So I guess I just keep thinking negatively, and the months will continue to be positive. All right. So all kidding aside, so the market's been doing great. The Russell's beginning to, look better. Smaller stocks look good. I'm glad that Brad, you brought up the fact that the Fed is going to make an interest rate decision on Thursday. Is it Thursday? Yeah, Thursday, November 7th. They're going to be meeting on the 6th and then announcing the decision on the 7th. My best guess, because we saw the GDP report, and the GDP came in where we had slower growth than expected by a little bit. But I think that would be a reason why they would continue to cut, because they don't want this economy to go into recession. They want to have a soft landing. So they want to start cutting, because really a cut begins to help the economy months down the line. 3-6 months down the line, it's helped the economy. So they got to start priming the pump, kind of getting things to really start growing if they're contracting, because what they would hate to do is have a recession on their hands. I think it would be a bad thing. So, and the consensus is that it's going to go down by 25 basis points. So that's expected. If they cut by 25 basis points, maybe that causes one more rally. That'd be great. If they don't cut by 25 basis points, I have to think that we're going to have a sell-off. And if they cut more, then we would have a real rally on our hands. So that's some news that's going to happen coming up on Wednesday, Thursday. They meet on Wednesday, and then they announce on Thursday. So interesting to see. Along with the Fed, right, we got this big election. I've got my vote in. I live in California. We fill out our ballots, and you can vote, the old-fashioned way and show up and do your ballot into a machine. Or in here, we get our ballots like, I'm going to say a couple weeks in advance, if not a month. And then I fill them out. I filled out mine. My wife filled out hers. And then I drove them down to the county site where you drop them off into a big giant box that looks pretty secure. Got that done. Got an email that my Vote was cast, so I'm good. And we'll see. Everybody else will vote, has either voted or will be voting between now and Tuesday and on Tuesday. So we'll see where that happens. That's definitely going to be taking up a lot of the mind share of the folks, understandably, especially Tuesday. I have to think that volumes on Tuesday is going to be super low. I have to think, but my my predictions have been kind of off. The predictions on things have been a little bit off. Now, Monday, we have some interesting earnings reports. We have Vertex, Pharmaceutical, Palantir. Palantir is a pretty well followed stock, so I thought we can take a peek at what that's about. This one, which is Zoetics, this one's interesting to me. It's like for pets, and it's we'll take a look at that in a minute. But there's a lot of good companies. You got Realty Income in there, Illumina. They're down to San Diego. That's why I know them. Lowe's, I believe, is a financial services company. There's just so many companies that are announcing. And is this the company you were interested in here? Tomas, TPG? No, this is not it. So you wanted to look at trip.com, and we will definitely do that. So so there's a lot of earnings. I mean, each day there's 243 on, well, no, that was 243 on October 31st, sorry. But there's 171 on Monday, 184 on Tuesday, 379. Oh, man. And then 497 on Thursday. Talk about overload. And on Thursday, Airbnb is going to announce, and that's one of the stocks that I've got a fair amount invested. Fortinet's going to announce. I think they've really been benefiting from CrowdStrike's debacle. They are looking good. And looks like Trip.com, the symbol is TCOM, so we'll look at that. Put that in here. All right, perfect. So let's get rolling. Let's start with this company. Novo Nordisk is gonna announce, and they're gonna announce on November 6th, which is Wednesday. The reason I want to bring this up is this is one of the pharmaceutical companies that's done really, really well. It's a $495 billion market cap company. They're out of Denmark. They're up just 16%, which is a surprise. But over the last 5 years, man, look at that rise, 305%. Because they are one of the two companies that really capitalized on the weight loss drugs. These guys did specialize in diabetes previous to like the whole weight loss craze, I guess, or the big success in those drugs hitting the market, because people are both getting them prescribed. If they have diabetes, then they qualify and they get them prescribed and they get to use their insurance for those things. And second, people are willing to pay cash. And whenever the pharmaceutical company receives cash payment, they eliminate the negotiated rates that they have with insurance companies. Example, United Healthcare is humongous. They're massive. So they have leverage on a pharmaceutical company where it's like, hey, we'll accept your pharmaceutical, but we're going to get a discount. And they negotiate that successfully. Both sides kind of win because Novo Nordisk and Eli Lilly need United Healthcare. And they pre-negotiate it. So when a patient gets a prescription and it qualifies to be covered by United Healthcare, Novo Nordisk and Eli Lilly will get a partial amount of that revenue because they will have to take a discount. But when a patient pays cash, it's almost like 100% of that revenue comes to Novo Nordisk. So they like, Eli Lilly and Novo Nordisk like cash payments. Those are very, very profitable for them. And that's why they're both companies have really gone up in value. So this company, just to show you their growth, before this weight loss momentum, in 2018, they weren't growing. 2017, they weren't growing. But then they started to go in 21, 22, 23. And this is really substantial growth because it's in the DKK, which I'm not sure how that converts to US dollars, but that's substantial growth for a well-established pharmaceutical company. In the trailing 12 months, 28.15. The growth looks good. It's 25%. So this company is doing great. And let me look at what the DKK to US dollar is. The Danish kroner is where it's 15 cents. 15 US cents. So 0.15 would be the ratio. So on this revenue, it's 258. So this would be 30 plus 30 plus about, call it 8. So about 38 billion in revenue over the trailing 12 months. Still pretty good sized company, 38 billion. Let's take a look at their cash flow, see how valuable this is. This still in the, yeah, it's still in the DKK. So 81. So 81, that would be roughly about 8.8 billion in free cash flow. Now this one, these stocks to me, they seem a little bit expensive because they're generating about, call it 9 billion in free cash, and their market cap's pretty much 500 billion. So when you divide 9 by 500, you're at about 8. Is that 18? Let me do that quick math in my spreadsheet. Yeah, so 18. And that's not too bad though, considering that they're growing. So yeah, I mean, this could be attractive, especially since it had a recent pullback. If the growth continues, this is a pretty good, I would call it a pretty good reasonable risk with a reasonable return potentially. And we'll see how they announce this week on the 6th. This has been one of the big success stories in pharmaceutical. I know other companies are coming into the space and trying to bring in and introduce their weight loss drugs. We'll see if they're successful. For now, it's just Eli Lilly and Novo Nordisk. So that's one of the companies. Let's jump into TCOM. Okay, so TCOM, and this is in US dollars, this valuation, 42.45 billion. Revenue is 6.7 billion. So they are a travel company in China. So these guys are competing with Booking, Expedia, Airbnb. Wow, really real success story, 91%. What's interesting is, you know, China stocks have been beaten down, but this one hasn't. This one's done quite well, I guess, but I shouldn't say that quickly, because what if most of that rally came in recently, right? Because China stock started to rally. Yeah, I think when China stock started to rally, look at that, up 38%. So that's a pretty good return there. Overall, this has been a winner though. You had a pullback earlier to this year where the stock pulled back about 31%, but then from there, from the very beginning of August to this point, it's up 64%. So a really, really dynamic and rewarding stock over the 5 years. Interesting. So the appreciation, we've seen it over 1 year, because over the 5 year, it's still, you know, investors did well, but really all the upward action came in the last year. So they are 6.71 billion. PE is 22, forward PE is 19. It's a strong buy. Boy, it's been bid up. Holy smokes. This feels a little bit like it's probably going to settle down at some point. When are they going to announce? November 18th. So we've got a couple weeks before they announce. The growth has been very good. You've got 50% growth in the trailing 12 months. That looks good. And this is in the Chinese currency. What is the CNY? So that's 0.14. Every Chinese yuan is worth $0.14. So the growth is really good. And the growth is really just taken off. What happened between 22 and 23? Did they acquire a business? But this looks like an acquisition. Because if this is organic, that's really amazing. They were at 33, and then we went into 2020 with COVID. That might be it. Is, you know, the company was doing fine in 2019, and then COVID hit. And I know China, from what I read, they were more controlling and they really shut things down. So it looks like they shut things down in 2020, 2021, and people were not willing to travel until they came back in 2023, and they have stayed traveling. So they probably saved up a lot of money and now want to spend it and start enjoying some travel. When we look at their cash flow, I'm not getting a trailing 12 months, but, and this is still in the yuan, correct? Yep, in the yuan. And wow, cash flow really jumped. This is going to be roughly about $3 billion of free cash. But even these 2 years, the cash flow was positive, which is really good news. I gave them a complete pass on COVID year because it's not their fault that we had this pandemic. Okay, I don't know if they're going to. The data doesn't really make me comfortable because you had before COVID, they were generating 6.5 billion yuan, which if I convert it correctly, I'm gonna get to about, I'm gonna call it about 900 million to $1 billion. Yeah, and so that's kind of like what they were before COVID, and then they started coming back, and now they have this big, massive number. I don't believe that's going to be sustained. I think it'll drop down maybe to about 10 billion yuan, but it'll be hard to forecast. This is where I'm going. Is it's nicer to have smooth numbers where you see just gradual growth. Then you could say, okay, well, they've been growing at 10%, so I'm going to grow it at 10% going forward. Here, it's a little bit of a guessing game where I don't know what they're going to do from a free cash flow perspective. But if we use like 1 billion as a factor and they're growing really fast, I mean, this company is worth 20 to 30, maybe even $40 billion in value. But I would not be a buyer at this level because, I mean, China's kind of bitten us a few times, right? Me personally. So I would want this to settle down a bit because the value of the company has gone up really, really fast in a very short period of time. It looks like an interesting company. I'd also want to like have a good expectation on, is their growth going to be sustainable? Now, China does want to grow their economy by 5%, which is very good growth. This one here, it looks to me like it's not a great opportunity. And it's not like this is, I would probably wait on this, and I would expect that it's going to settle down to some extent and maybe come down to $50 a share or something, or maybe even $60 a share. So any thoughts on this one, Tomas? Anything that you've done, maybe researched on Ecom?
Well, I saw that it was a travel agency, and I looked it up, and I saw it, and I thought, okay, this is a massive company for a travel agency, and the stock price was doing pretty well compared to the other Chinese stocks. I was just curious. I didn't look in depth through the company, but it was just an idea.
Mm-hmm. Yeah, it's a good one. And I mean, analysts, there's 7 analysts to cover it, and they're saying that it's fairly priced. Let's look at their growth aspirations here. So they are supposed to keep growing their revenue, and they're going to grow their earnings per share. So if they hit those numbers, the stock's probably going to rally, but I still feel like this stock is gonna give up some of these gains. That's a lot of appreciation over a very short period of time. It's a good one. All right, so we looked at that one. Now let's look at one of the most, I'm going to call it controversial companies out there, and that's Super Micro Computer. Oh man, they're going to announce, I believe, on Tuesday, and that'll be really, really covered because the stock has just been getting murdered. Look at that. From March to this point, it's down 75%. Holy smokes. And of course, the most recent announcement that their public accountant has resigned and is moving on, that is just horrible news. So their market cap right now is 15 billion. But since they're down 75%, that means that at their high point, they were a $60 billion market cap company. And now they're at 15 billion. Kind of zeroing in on the last month, it's just been a tough month. They're down 40% from October 29th. So just over 3-4 trading days, this stock's really just gotten hammered. Wow. Now, it'll be interesting like, just if anything, I don't know what they're going to say on the earnings call, right? Like, I'm sure the question that I don't even know if they're going to have Q&A at this earnings call, because I would suspect that there's going to be some hard questions, and I don't know that they will want that right now. The biggest hard question is, who's going to be your public accountant? How are you going to get your financials audited going forward? And I don't know that they have an answer for that. Scott, go for it.
Yeah, on Supermicro, is making a reference or analogy to Enron appropriate, or is it not quite the same thing here?
We don't know yet, but I would just say that, like, when Enron was a company, they were in proportion, like, that happened how many years ago? So I forgot how many years ago. I think it happened. Yeah. So Enron was $100 billion company back in the year 2000. Okay. Back when 100 billion was like, holy smokes, that's a lot of money. Nowadays it's like, oh yeah, we got, 50 companies above 100 billion, and their market cap was substantial. It was like one of the most expensive stocks on the market. What's different between Enron and Supermicro is, even at 60 billion, right? Supermicro was not anywhere near like the top 500 most valuable companies. So it's not like Enron would be like comparable to if a company the size of Eli Lilly, which is nearing 1 trillion, were to all of a sudden be discovered that, oh, there's a lot of fraud going on. That's the Enron story. It was that big. It was humongous, and a lot of people lost money. And the saddest part, one of the sad stories is, some of their employees worked at either Enron or a company that was acquired by Enron, and they participated in the stock buy program, and they literally put their whole retirement in Enron stock. And for a while, it was like, oh, great, the stock keeps going up. That's awesome. But once the situation unraveled, those folks lost like their entire investment, which was their retirement, which was really, really sad. So Supermicro is different, but the reasons that the stock's getting really hit are very similar, because I think where the investigations are going to come in is on this number. Because a company like Supermicro, they assemble a computer, and when they ship it out the door, they recognize revenue. Okay. And companies can play tricks there. Okay. They could kind of have an agreement with somebody, and they could stuff the channel, meaning they ship a lot of things out, but they're not really sold. They're put through their channel, meaning they're resale partners, or customers are given these really desirable terms, like, hey, you don't have to pay me for 10 years. Well, they take the equipment and use it for a long time, literally for free. Now, Supermicro, if they were doing stuff like that, and all these things I'm saying are kind of made up scenarios in my mind of how you can manipulate revenue. I'm just giving you examples. And you can ship out product and recognize it as revenue. So your revenue line looks good. So you're really growing revenues. But in reality, when you examine those deals, that revenue shouldn't be recognized, because the terms you provided on that deal are just, you're not going to collect the money for such a long time that you should not recognize the revenue until you collect that money. That's accounting principles always want you to be conservative, and they're going to examine that. And your public accountant is not going to resign unless the situation's really, really bad, because Ernst & Young, if it comes out to be that Supermicro is fine, Ernst & Young just really overreacted and moved on information that was wrong. Ernst & Young's going to be in a lot of trouble with their own clients, because they're going to be like, well, we don't want you to throw us under the bus just because you're nervous. Why'd you throw Supermicro under the bus? So I would venture to guess that the public accounting firm did not walk away for no reason. There's probably some pretty big reasons there, and that's why the stock sold off so harshly. And I think to expect that the management team's going to answer a lot of questions when they announce, I think is unrealistic. I think they need to keep it short and sweet. And I think part of it is because if there is any fraud, it's criminal. So I'm sure their attorneys or counsels telling them, keep it short and sweet. It can't get any worse. Like, investors are not going to be like, oh, we hate you because you didn't talk and we're going to sell your stock. They already sold the stock, the ones that wanted to get out. So on November 5th, I think they're just going to probably keep it short and sweet, announce their numbers, and then move on. But what this thing's going to continue on, and at some point we'll know what's going on, because whoever takes on the task of being their auditor is going to have to look at all their financials and look at them really closely to the point where those financials that once the auditors get done, that's the real information. And that might take a year, and then we'll know what's going on. Between now and then, this stock's untouchable by most investors, including me. I don't want to touch it. Anybody have thoughts on Supermicro?
No, not me.
Yeah, this one's, you've heard the term falling knife. This one's a falling knife that was dipped in gasoline and is on fire. And somebody put it in a kiln and it's 3,000 degrees, red hot. It's red hot. It's a falling knife. Not only will you be cut severely, you will be burned. It's just it's a bad story. Now, one of the things I doubted Supermicro. I've been covering Supermicro. I probably have 3 or 4 videos on it. And hardware companies are not supposed to do this. Okay, this is a hardware company. One of my first investments was with Sun Microsystems in 1990, 96, 97. Sun Microsystems was the premium hardware company for the internet. And, the internet companies really liked Sun servers. They were some of the best. But what I learned painfully after losing money was that hardware is a commodity and you become super competitive really fast. And it's not like you get to enjoy kind of like a pharmaceutical company. They have a drug and they can enjoy 15 to 20 years of consistent revenue on a drug because they have that patent. They don't have competitors come in. Where Sun, like, I'm sure their competitors would buy Sun servers, reverse engineer them, and then come out with a server where they're like, hey, our server is almost as good as Sun Microsystems, but it's half as much. And Sun just saw competition left and right. So I learned a long time ago, hardware companies, they're just not worth a lot of money. Software companies is different. Software is, you can really build a moat around it like Microsoft, but hardware companies should not do this. They should not jump up in value by 300% in 3 months. That's just abnormal. So I shorted the stock. I made like 50% on that short position. I forgot when I shorted it, but it was like somewhere here, and then I sold it here or something. And I did not foresee that this was going to blow up into accounting issues. But I would just say, from an industry perspective, I just saw that this is not normal and it's not sustainable. And this is going to end very, very poorly for investors. And here it is. It's ending super poorly for investors. Anybody who bought in this range here is just getting really hammered and losing a lot of money. So Supermicro, now the whole AI thing, right? The important thing about the .com bubble, right? Let me show you a different stock. So this is Cisco Systems. This is obviously a real company that helped build the internet, but the market just got crazy. This was the most valuable company on the stock market for a while. It went up like crazy, like Nvidia, and went up so high that it came down, and then it came down hard. Like, it sold off 82%, while the company kept growing their top line revenue, continued to expand their business, become more important. Big governments bought Cisco. Big companies bought Cisco. Everybody bought Cisco. It's the best networking equipment you could buy, and they continue to grow. And they've never gotten back to this stock price. Okay, this is the .com bubble. Stocks really lost a lot of value, but the internet was real. The internet was 100% real. It ended up being bigger than we imagined it. We wouldn't have Facebook. We wouldn't have Google Alphabet. We wouldn't have, to a large extent, Apple, because the internet via digital signal on phones. You wouldn't have Netflix. I mean, just think of all the companies that once we wouldn't have Amazon. The internet created a new economy where all these incredibly valuable companies are built on. So it was real, but the stock prices got too high and they collapsed, and it's taken a long time. Cisco's never gotten back to their high. It has come up in value. So if you bought here, you know, you're doing okay with Cisco. You're up nicely. But this is what happens when stocks get overheated. Supermicro, as well as NVIDIA, I suspect, are following a similar path. And if, like, I think it's too early to tell, but AI is going to take a while for it to show real revenue growth, like real revenue and real profit. And is it going to be the internet? I don't think it's going to be as big as the internet. I just don't. I think it's going to be interesting, but it's not going to be as fundamental as the internet. The internet is totally fundamental. Now we have a connected world, and things were built on top of the internet. AI is like search that has been greatly improved. And that's the extent that I'm willing to go with AI. It's very interesting, but it's just not as transformational as some people are making it out to be. You know, so like the concept of you call into a company and they have AI answer your questions in the form of a chatbot answering your questions and so forth. That's something that the industry's been doing for 10 years, but they didn't call it AI. They called it something else. Now they're doing it, you know, and calling it AI. Well, it's kind of works. It kind of works okay. The customers still want to talk to a human being because oftentimes even the AI cannot answer their questions well. And if you go on like Meta AI or ChatGPT or Gemini, it does a good job of giving you information, but it's not answering your question completely, especially if you're asking about a product, my product that I bought, you know, 7 months ago and so forth. It doesn't completely answer questions. So we'll see where the AI, you know, the AI related businesses go. Supermicro was one of those AI businesses that was pegged, but it's not the big one, right? It's NVIDIA. And NVIDIA is still red hot. NVIDIA is still doing well. I short NVIDIA. I'm down 20% on that position. I'm going to get out of it at 30%, or if it's nearing 30%, I'm going to get out. But who knows? Maybe it'll turn and it'll start giving up some of those gains if the market loses confidence in the AI business model. So Supermicro, the big drama of the week. All right, so we covered Supermicro. Since we're in the software space, let's talk about Palantir. Palantir is really benefited. You could see they IPO'd and they were really popular. Then they sold off, and then they've really rallied. And over the past year, 121%. From the low to where it's at now, it's doing really well, 560. So Palantir, so what I understand Palantir to be, and I've worked in the software space for a long time, is they're a big data company. They're like a big analytics company, and they help you find patterns in data, big data. Now, they're probably really good at it, probably the best in that category, but it's not a new concept. It's not like they just invented it. Now, the thing that I struggle with this stock is 21% growth. And a lot of the customers they got, it's like they sell to the US Army, right? Well, there's only one US Army. You sold it. Who are you going to sell to next? And now that you sold to the Army, the US government's not going to let you sell it to every government in the US and the world. They're going to say you can only sell it to friends of the US. And in some cases, they may say, and there's some products we're not going to allow you to sell. They're growing 27% in the most previous quarter, which is very good. But my comment on Palantir is, if you can't grow faster than 21%, you're still a small company. I don't know why investors are so excited about this company. $94 billion market cap. And when you compare that to one of the bigger software companies, and I'm going to go to Adobe, which is a software company. And Adobe is 212 billion in market cap. They have revenue of 21 billion. They're growing at 11%. Okay, so the difference between 11% and 21%, you know, Palantir is 10% of their size. It's way smaller. They should be growing much faster if their software is that exciting and powerful. They should be growing much faster because a bigger software company that's 10 times their size is growing at 11%. So this company here is far less risk, and I'm willing to expect that Palantir, their main competitors are going to be Microsoft, Google, Alphabet. Those two guys, they also create a product that you can put into the big data. Like Google, Amazon has a product called BigQuery. So they're going to be competing against Palantir. So Palantir is this tiny little company that's going to be competing against two of the most valuable companies in the market and two of the most intelligent companies in their space. So that's one of the things that I just look at Palantir and go, this is going to crater. This is going to get hammered. Because if Google Alphabet's got other focuses, right? They're focused on AI. They're focused on growing their cloud business, focused on continuing to grow YouTube, research business, and so forth. But if they ever decided we want to focus on something that's going to be disruptive to Palantir, they could take away Palantir's market because they're just so damn powerful. They can give away their product just because they want the space. And Microsoft can do the same thing. So we'll see how things play out. They're going to announce on Monday. And this is a space, like I've worked in software for a long time. So I think I've shared with Tomas and everybody that, pick areas that you really know and can really understand, either through your professional experiences, life experiences, areas that you're really interested in. I really understand software companies because I've worked in them for 25 years. Scott, you have a question?
Hey, yeah, just a quick comment because probably the full explanation would be for another time. But with Palantir, I would, for the moment, just caution against shorting the stock because there's more to it than the story you just said, I think. And yeah, for now, that's the main thing I would say. I mean, for example, you said when you mentioned big tech, we want to compete with them. So they're not only selling to the US government. They actually have a part of their company. Now, I think it is the smallest part, but they have probably the fastest growing segment of their company is working directly with companies, so civilian industries, and so helping companies reach their goals. And I think Microsoft has actually tried this. What they're doing, it's not just, a large language model, right? Not just what we think of as AI, but kind of the wrapping that you put on it. And I think Microsoft failed at that. So now there's more to it. And I would also say, right, devil's advocate, that if you're shorting it now, certainly they might not hit their earnings and the stock might fluctuate in the short term. But certainly for the long term, I would definitely not advise to short the stock. But that's just me.
That's good advice. I agree with that. I'm gonna, and my decision is short Palantir. I am shorting Palantir, is because, and again, I totally respect what you're saying, and you may be absolutely right. And this stock could continue to flourish and really just go bananas. But we'll see. We'll see. I think it's going to take about a year, really, maybe 2 years, to figure out if Palantir is going to be a $10 billion company or if it's going to stay $2 billion, $3 billion company. If it stays a $2 to $3 billion company, the stock's way overpriced. If it goes to 10 billion, the stock is worth every penny. And that's really, they're going to have to put up or shut up. And they might have the most brilliant idea, but they got to execute. We'll see. Thanks for the comments, Scott.
You're welcome.
I think I really appreciate you taking the contrarian point of view, because I think you make very good points. But that's the thing about investing that makes it super interesting is, how does, one company, and even Palantir in itself, right? When you look at the 5-year, well, their story didn't change from 2021 to 2022, right? And this is about a year and a half, year and 3 quarters, but it sold off by 82%. It's like a perception game. The market just didn't believe in them. And then the market started believing them, and holy smokes, the stock is up 560%. So if they execute, the stock's going to keep going up. If there's
I'm sorry.
ahead.
Just the one suggestion I would have would be, from your analysis, I would recommend further research into the company. Now, you might come to the same conclusion, but I think there's more to the story. That's all I would say.
Okay. Good point. Perfect. So that was Palantir. They announced on Monday. That's probably going to be the hottest name on Monday. There's a company that actually is worth more than them, but they're not as popular and well covered. So that one's probably going to be the hottest one for Monday. So this company here, yeah, this company, it's for livestock and all kinds of animals. So this is a pharmaceutical company for animals. And of course, like animal care where you have livestock, and that's an industry. But then you have animals that are pets and parts of, a part of the family, and they're really well taken care of by their owners. So it's an interesting company to me. It's up 15%, but man, look at that sell-off. It was down nicely, and then it came back up. Over the last 5 years, it hasn't been so exciting. Over the past year, it's been interesting. It's a pretty good cap company, 82 billion. It's 9 billion in revenue. And their growth is okay. It's 8.43%. The last quarter is at 8.3, so that looks good. I've looked at this company in the past and thought, interesting. When we look at cash flow, the company's had cash flow every year. Very good, consistent cash flow. So you have a growing business. The company is a little expensive compared to cash flow, right? You'd have to multiply that cash flow by about 35 or 37 or so to get to this number. So that's a little expensive, but we'll see what they announce. This one will be interesting to take a look at. Talk about diversification. I don't have any company that looks like this doing pharmaceuticals for livestock and animals. And the other companies that look interesting are like, there's some companies that really focus like e-commerce for pet owners. That looks interesting. They are fairly expensive, but they look interesting. PE is at 35, and then forward PE is down to 30. So that looks a little better. Analysts think it is a strong buy. So this one here is going to be interesting to follow, and they announce on Monday. So Zoetics. All right. So I'm going to go over Airbnb, and then maybe we'll call it a day.
Victor, can I add one more company?
Yeah.
It's called Vale from Brazil.
And give me the symbol.
VALE.
Yeah. Vale, right? Like that.
Yes.
And this is a mining company.
Yes. A little comment. In Argentina, we have limited options in what to invest because of all government regulation now is changing, but we cannot invest, for example, in small caps from USA. So Brazil, we can invest in all of the companies in Brazil. So analysts here in Argentina are always looking up to Brazil. So what to invest in that country. And this company, you're going to tell me, no, this is not a long-term winner because it's a mining company and so. But I know that in the group there are senior investors, and this company pays a juicy dividend, and I think the revenue it's fine. But I'm not bringing it up for a long-term winning investment, but maybe for the senior investors, this could be a good option.
Yeah. I own something similar to them in a different company, but I'm familiar with these guys. I probably looked at them 3 years ago. It's been a while, but the one thing about, so this company mines and sells iron ore pellets, nickel, which is important, copper, which is super important. Copper is really valuable, and so forth. Now they're in Argentina. I know that they had some big, they had a very bad accident where some people lost lives. I believe this is the company a long time ago, like 6 or 8 years ago or 10 years ago. And they had to compensate, I think, some people that got killed and their families, and some people that got injured. The PE is super low. Look at that, 5 and 4.5. Now, we've been in an economy that's been growing modestly, but if you begin to see high growth, especially out of China, and the copper demand goes up, nickel goes up, and even construction, right, for steel, iron ore, and so forth, and commodity prices go up, so you're going to see Vale really, really rally. But for now, they pay a nice dividend. Can they afford it? Are they profitable? You can see that this is where revenues came down. They really moved up when commodity prices were higher, when we had the supply chain constraints. Commodity prices really went up. So those prices went up. And then once commodity prices came down, revenues came down. Having said that, let's see if they maintain their profitability. So net income, they're still profitable. Good. Okay, so that looks good. So free cash flow per share, 583, 834. Their dividend, yeah, they can afford their dividend. Their dividend is just a fraction of that free cash flow. The dividend payout ratio it shows here, and this is probably based on income, net income. So they can afford their dividend. So that's a nice paying dividend. If you look at commodities, and I welcome any type of comment from you guys, but commodities are pretty low price. It's kind of like oil. It's kind of low priced. And if it rises, these companies do better. In the meantime, you get paid 13%. So that's not a bad proposition. I own TX, which also mines and sells iron ore, but they sell steel products as well. And that's my investment. I wouldn't want to be in Vale as well as TX. So that's a pretty good idea. And I'm curiosity. I don't know a lot about Brazil. I don't know a lot about Argentina, but like, how big is Brazil's economy? Is it massive? How big is Argentina's economy?
Well, Argentina's economy is not pretty big, but Brazil actually it is the biggest economy in South America. I believe by order it should be USA, Mexico, and possibly Brazil. I don't know about Canada. I have no information about that. But in terms of size, I believe Brazil should be the number 3 in the whole continent.
Okay. Very good to know. Yeah, I've seen this company. There's also another company called BHP. I think it's a very investable company. Let's see if
BHP is from Australia, I think.
That's right. Oh, my browser isn't working there. Here we go. So BHP is also doesn't pay the high dividend like you just showed. They too, their stocks come down, not as much, down 2%. They pay a 5.22% dividend. This one's kind of been going sideways. You're up 28%, but this dividend, if you compound it, it's probably adding 30% to your investment, and you'd be up about 58% or so. This is a good company, well operated, and they really supply like Asia well. A lot of their production goes to China, and this is a good comparison against Vale. And TX is a little different. TX is not quite like I would put BHP and Vale very similar. They're very comparable. This one is a little different. This one's not only do they extract the iron ore, but they actually have the facility to make rolled steel. And I like that big part of their production is in Mexico, and they produce products in Mexico that end up going to the US as well as other places. They also sell their product into the US, where the US takes it and then they produce products here in the US. Big into appliances and stuff. And TX also has an operation in Argentina, Brazil. So they are in Mexico, Brazil. I know they're in Argentina because I've owned the stock for a little bit. So this one's also an idea.
I have a quick question.
I'm sorry.
No worries. I have a quick question about Brazilian companies and Brazilian stocks. Do you guys know if they have dividend withholding tax? Because I believe Brazil does not.
I don't know exactly the percentage that the government takes on every dividend, but I know because I listen to analysts about Brazilian stocks that Brazil has very low taxes on dividends, and usually companies give very juicy dividends in order to avoid I don't know how to say it. If
Corporate
you-
tax.
Yes.
Interesting. Yeah.
Okay.
TX is headquartered in Luxembourg.
And TX is very known in Argentina. They are in the stock market with a different symbol, the Argentinian subsidiary. It is TXAR, but it's not as good as the one you hold.
Mm. Yeah, I think this space, if you buy at the right time, you're going to win two ways. You're going to be paid a dividend that they can afford, and the stock's going to move. I would say that now's not a bad time to be looking at these because the economy isn't booming in the US. But once it starts to pick up speed, the commodity prices are going to go up, and Vale, BHP, TX are going to start to move up. Their stock prices will. So not a bad place to be putting some analysis time into. All right, so I think with that, I think I'm going to stop there, and we could wait on Airbnb. I'll cover it on a live stream later today. So let me stop sharing my screen. And so guys, so thanks for tuning in. Please let me know over email or on Discord if anything else pops up you want to talk about, and we can talk about it. And then I'll probably see you on some of the live streams this week. I'll try to live stream each morning as much as possible, and then a couple evening live streams because there's so much going on. But there's just there's probably going to be a couple more weeks of a lot of earnings, and then after that, earnings kind of subside, and we can kind of take a break. All right, guys. So enjoy the rest of your weekend. Thanks for tuning in. I appreciate it, and I will talk with you soon.
Hey, thank you.
All right.
Thanks, Victor.
Okay.
Thank you, Brad. Bye,
Thank you.
Scott.
Bye-bye.
See you,
Bye,
Tomas.
guys.